Ladies and gentlemen, welcome to the last lesson. The lesson on market psychology, right? So what I like to call it is obtaining a probabilistic mentality, right? So in this lesson, we are going to be diving in to the most important part of trading. So if you have made it this far, we have ran through candlesticks, we have ran through technical analysis, we've ran through how to get in and out of a trade using price and volume analysis, supply and demand, how to draw zones. We've broken down market context. We've broken down options, right? How to trade them, premiums. We've broken down risk, reward, right? So now we are at the most important part of trading, what I like to call market psychology, right? Now, this is a subject not a lot of coaches like to talk about, not a lot of trainers like to talk about, and it's so vital for success, right? Having and obtaining a probabilistic mentality is the reason why 90% of traders fail. 90% of traders fail because they struggle to realize, they struggle to understand, they struggle to wrap their head around the concept that trading is not relied upon complete technical analysis. What I mean by that is if technical analysis made you rich, don't you think every trader out there would have tons of money and be extremely successful in the market? So in this lesson, we are going to be breaking down a lot of amazing things. So here are our goals, here are our objectives. Number one, why 90% of traders fail. We're going to be covering two key components of market success. We are going to be looking into the importance of position sizing and how it kills traders. And most importantly, we are going to be running through how to rewrite your mind, what I like to call your mental software, right? Your mental code. We are going to work on reprogramming your mind in ways that you can use ideas, strategies to your benefit. So first things first, why do traders fail, right? So traders fail because they don't properly comprehend the two key components for long-term success, right? They fail because they rely strictly on analysis and not probabilities, right? And what I mean by that, right? So I'm sure a lot of you traders out here, right? And when you were beginning, before you probably even knew what technical analysis was, before you even knew how to draw a supply and demand zone, I'm sure of it that you've had an amazing trade, right? 300%, 400%, crazy trades, right? When in the beginning, when you were just starting. And now where this gets interesting, right, is as you grow as a trader and you put on bad trades, right? You put on a trade and it doesn't go your way, right? You blame the market, right? Or you blame your analysis, right? So say the night before you're going, all right, I need to put on a great trade, right? My goal is to have a phenomenal trade tomorrow. The S&P 500 has a demand zone here at 390. And once it bounces off 390, once I see a chart pattern at 390, I'm going to go long, take her up to supply, let's say at 394. That's my trade, that's my target, right? So when you enter that trade with confidence and you think you have complete control over the market and you're not evaluating the uniqueness of the market where no trade is the same, the S&P 500 comes down to supply, or comes down to demand at 390. Makes a double bottom, perfect chart pattern, right? The market's giving you its language, but you're trying to predict the move. You're not reacting to what the market's telling you. You're basing your trade completely on technical and fundamental and price and volume analysis. Trade does not go your way. What do? You hold on to the trade and get smoked. You blow your account up because you know you've done the analysis, right? You deserve a good trade, right? This is what's going through your mind. And I speak on this because it's cost me a fortune to get past this, right? So for all you traders out there that are discouraged, don't give up just yet. So price comes down into 390 demand, tries to reject, and then breaks even lower. You hold on to your trade thinking, hey, well, there's another demand zone here at 388. Let's give that a shot, right? Drops down even lower. And by the time it's already blown past your stop loss, your premiums are worth nothing and you're hurt. So that's a major reason why traders fail, is that they rely strictly on analysis and not probabilities. And we're going to talk about what the difference is, right? So then number 3, position size. One of the main reasons I used to fail as a trader is I had a small account, and I would have, let's just say, $1,000 in my account, and I would use that full thousand, because for all you traders out there, and I know we discussed this, but how you day trade options is having a cash account, right? So basically what that means is you can day trade options with a cash account even if you have less than $25,000. And what I mean by that is you could buy and sell an option in the same day. So how that works when you have $1,000, right, is I used to think I had to make the best trade every day, right? Let me give you a quick example. So there was a month I had a goal, right, where I wanted to make $5,000 in the month of August. Now, as I'm trying to achieve that goal, I'm knocking out amazing trades, right? I think I had 23 straight trades of winners. And on the 24th, my position size, I was using my full account, doubling down every day. I lost my whole account on one trade because of position size. So we're going to be breaking down the correct way to build a small account and why that's so vital and how it kills you as a trader if you do not do it correctly. And then number 4 of the reasons why most traders fail is the wrong market mentality. So we're going to break down what the proper market mentality is and what the wrong one is. So first things first, the wrong market mentality, right? So I know you heard me talk on this before, and I will say it again till I am blue in the face on the Discord and probably every single one of my videos. Most traders try to predict the market versus reacting to what the market's telling you. Most traders try to predict the market versus reacting to the market language. Now, I know you heard me say this before, and I'll say it again, but the market speaks to us, and then we put on a trade, right? So how that works is the market will make a chart pattern. The market will make a volume. A volume will come in very heavy, right? This is the way the market speaks to you and screams to you, go long or go short or don't put on a trade at all. Now, the most important part of this is not predicting what's going to happen, but reacting to what's happening. So when we see a chart pattern, right, let's say we see a double top in a supply zone, we have a high probability by reacting to that information, by reacting to that variable and going short. Now, does that mean 10 out of 10 that you're going to have a successful trade? Absolutely not. It's just not how it works. But playing a game of probabilities tells us and shows us that over the long term, you will become successful given your edge in the market. Our edge being technicals analysis, supply and demand, price and volume analysis. Whatever analysis we got, that is our edge, right? We've ran through our process development. That is our edge. It is not 10 out of 10. Any coach, trader, or person that tells you that their strategy is 10 out of 10 is lying to your face, right? So the next thing, emotionally attached to trade by size and ego. So a main way to get emotionally attached to your trade is by way too large of a position size, right? Like bring it back to that what I was just talking about with the $1,000 account. You get so attached to a trade because you need it to go well. Instead of taking 10 trades with that $1,000, you're taking 1. That increases your vulnerability of getting smoked. So becoming emotionally attached to a trade by size can happen like that. So it's a must, especially when you're starting out, to only trade maybe 1, tops 3 contracts at a time, right? Take 10 trades versus 1. Next, the harder you study analysis, the better your trades. Extremely false, but one of the main reasons why most traders fail. And that goes back to what we were talking about, right? So most traders, this is the process of what happens. They study technical analysis, or we'll just call it market analysis, so much, and then they put on a good trade, right? And they go, hey, this is why I did well. I did well because of how well I studied market analysis, right? And then they keep going until they put a bad trade on, and they go, man, and then they go dive right back into the computer, right? And they go, all right, we need to study more analysis. We need to study more analysis. And they keep, and it's actually programmed in our minds from a young age to think the harder you work, the more you deserve. Right? Think about it. If you tried getting into college, you had to get great grades on your test. How did you get great grades on your test? By studying all night, right? You got a test, you need to study, put in hours, right? You want to get a promotion at your job. How did you get the promotion? By putting in tons of hours, right? Taking on tons of responsibility. So our brain is wired to truly believe the more technical analysis we study and do on our charts, the better we do. And the reality is, we only have so much mental capital. If we're trying to look at every single variable the market gives us, we are definitely going to fail. So we're going to talk about how to bring your brain back, right? And how to reprogram your brain to not make that mistake. Now, another thing people do and traders do that cause them to fail is they blame the market. They blame the market movers, right? 0-day options. You pick 2 out of the money and it was a balanced market all day. Oh, well, that's big money's fault. No, bro, that's your fault. Okay? Accountability. You need to take full ownership, right? And you need to understand every trade is so unique. The chances of you having a perfect trade over and over is extremely slim, right? And I always use this analogy with professional gamblers, professional poker players, right? Now, what they do is they bank on the fact that over 1,000 hands, they're going to come out on top, right? That's how we need to think as traders, the longevity strategy, right? So we'll break down that and why that works. Now, the next is not understanding the uniqueness of the market variability, right? Is exactly what I just said. There's no way any trade you put on today will happen the exact way tomorrow. It's just not how it works. And honestly, you don't need to be correct every day. Being correct does not make you money. Just like we were talking about in the beginning when you first started. I'll never forget the first time I started trading, I made over $5,000 in a week, and I thought I was going to be a millionaire in a month, right? And it's all because I was just getting lucky, but it just shows the uniqueness of market variability, right? And now the last one I got on here is they demonstrate the wrong position size, right? And we're going to break into that and why it's important. So first things first, to become successful in the market, you need to understand 2 key components. First one, market analysis. Second one, a probabilistic trading mentality. So let's break down first market analysis, because don't get me wrong, technical analysis, price and volume analysis, they are extremely important for becoming successful in the market. Hence why I have a whole course on how to understand what the market's telling you, right? So let's break that down. So what is market analysis? So market analysis, the way I like to talk about it, right? Because what a candlestick chart represents is the forces of supply and demand, the buying and selling auction. So the market analysis, another word I like to say is the market language. This is how the market communicates to us. This is how it tells us when there's an opportunity, right? This is how it tells us, hey, go long. We got a double bottom in a demand zone, go long, right? 7 out of 10 times, we're going to make money on that trade. Right? So market analysis is technicals, candlesticks, price and volume, chart patterns, double tops, double bottoms, right? And how we react to the current market story, right? So that is how you need to look at market analysis. It's like having a conversation with the market, and how you react to it is your market analysis. That is the first key component to becoming highly successful in the market. The second is a probabilistic trading mentality, right? So what is a probabilistic trading mentality? Well, first, it's all about reacting versus predicting, right? Second, it's about visualizing the long-term probable outcome with your edge. I love that word, probable, excuse me. A probabilistic trading mentality is knowing, hey, over 100 trades, I am going to be successful with around 70. And it will break, and I know we already broke into team metrics and probabilities, right? And I will be communicating on the Discord every week, every month, every year on my probabilities and setups. I'm going to walk through any trader that wants to, how to do theirs, right? I believe so much in understanding where you're at today to get where you want to be tomorrow. It's a vital part of the process, right? Data-driven decisions, right? Extremely important. You need to understand the probabilistic expectations of your setups, but most importantly, you need to play the long-term game of longevity, right? These people that hit $100,000, $1 million accounts, do you think they are putting half of their account in every single trade? It's not happening. That's the easiest way to get blown out. Because to do that, just like the example I gave you before, you can have 23 amazing trades, but the 24th wipes out half your account, you fail, right? The main part of the picture here with probabilities is playing perfect position size, and we're going to break down how to do that. So the last part is relying on your longevity and not your technicals. If you rely on your technicals, I promise you, you will fail as a trader. And now that's a trick question and a trick statement because you need to understand your technicals as well. But if a trade does not go your way, it is not necessarily your technical analysis' fault. It's probably because you held on to the trade too long. And remind you, how could you blame technical analysis if our edge only works, let's say, 7 out of 10 times? You have to account for those 3 failures. It's just how it works. But over time, if used properly, this will work in our favor. 2 key components. Now let's break in position size importance, right? So I make this super simple, nice and easy, okay? So the correct way to do this, right? Well, let's break down the wrong way first. Let's say you have a $1,000 account. That equals 1 trade. That will equal an emotionally attached to 1 outcome, which is a recipe for disaster. So just like the example I gave you before, I started out with $500. Made a $500 trade, turned it into $1,200. Made a $1,200 trade, turned it into $2,300. Made a $2,300 trade, turned it into $3,400, and then $3,400 into $5,500, right? Super attached to every outcome, got extremely lucky, hit 5 hitters in a row, right? What do you think happened on the 6th? Blew up half my account. So now that I blew up half my account, I'm definitely going all in on the next trade, blew the whole thing up. And I was lucky to catch this quick, even though this has been a huge battle for me in understanding position size, understanding that you don't need a home run every day. And we will break through this and walk through this every day on the Discord because, guys, it is a must to understand the correct way to trade. And what that is and what that looks like is on a $1,000 account, you put on, let's just say 10 trades. That's pretty high, but let's just, say 10. That gives you 10 probable outcomes, which is success because your edge guarantees around 6 to 7 out of 10 trades, right? Super important. So you need to rewrite your mental code, okay? So how we do that is with the 2 key components, which is A, understanding market analysis properly, right? And B, which was maintaining a probabilistic trading mentality, right? To rewrite your mental code, you cannot rely solely on analysis. You need to rely on probable outcomes, right? You need to rely on your edge over time. That is the only way to become successful in the market. And I will pound this into your head every single day because I know how important this is, right? Your market mentality and your edge only, right? You need to recognize the market language and react. That's what makes successful traders so successful. They have a free flow of getting in and out of trades, right? And I'm sure a lot of you that have ever traded on a stimulator account, right? A fake account. And I'll never forget one of the first times I used a simulator account, I turned my $100,000 into $3 million. And I'm like, man, trading's so easy. And then once I threw some live cash in there, it was a way different game. I was getting emotionally tied to trades. I was becoming obsessed with my outcomes and my analysis. And then when I failed, I would just keep obsessing over my charts and chart patterns, which helped me understand it and be able to teach it very well, but was really bad for me at the time. It cost me a fortune to learn the correct way how to trade, right? So your mental and emotional pain comes from relying on your your mental and emotional pain come from relying on your analysis being correct, right? So you need to turn that, right? So when you're wrong in a trade, you need to cut your losses. So every trade you make has a target and a stop loss, right? So before you put that trade on, you have a target and a stop loss. And I know we break this down in our process development lesson, but every trade you take is going to have 2 probable outcomes. You're either going to hit your target are you going to hit your stop loss. There's nothing in between, right? That's it. But once your stop loss is hit, okay, there is no reevaluating the trade. There is no recalculating a supply and demand zone. There is no moving your stop loss even further. That's not how it works. Once you do that, you have now diluted your edge, where now your edge is not as powerful, right? So that is extremely important that you understand that, right? And you need to understand position size. So what does a successful long-term consistent trader look like? Okay, so a successful trader does not rely strictly on his market analysis, right? He knows that out of 1,000 trades, he's going to be extremely consistent and he is going to make money. He is not focused on just one trade. Let me say that differently. He is not married to the outcome of every single trade. If he has a bad trade, he knows over time his edge is present and he is going to make tons of money because he trades at a specific process where if it hits the stop, he's out. If it hits the target, he's out. He relies on long-term probable outcomes based on his edge. He reacts to the market language. He does not try to predict the future, right? He trades with perfect position size to stretch longevity, which I highly, highly recommend trading one option at a time to build consistency, right? To build your trading account. One option at a time keeps the doctor. Okay, one option a day keeps the doctor away. All right, he's not emotionally attached to one trade, and he is focused on long-term probable results, right? Guys, this is just a never-ending subject, right? Your market psychology will be a part of you until you die, right? And I recommend an amazing book. It's called Trading in the Zone by Mark Douglas. It has opened my eyes up to so many things, right? I keep it on my trading desk at all times. I read it probably once every 3-4 months just to brush up on it, because the way we were programmed growing up, we truly believe subconsciously and cognitively that the harder you work, the more you deserve, right? And there's many things and many cognitive behaviors we have in our brain that do not agree with the markets, right? And that is why 90% of traders fail. Now, guys, I am here to lead you, right? And let me just say one of my favorite sayings, right? You can lead a horse to water, but you cannot make him drink it, right? I can lead you to understanding market analysis. I could lead you to technical analysis. I could lead you even down market psychology. I could show you how to put on a trade, but I cannot make you do this correctly, right? So your success is so vitally connected to how much work you're willing to put in, but you need to put that work in correctly. So this is the last lesson, right? So now you're a part of the Discord. You use every trading resource you got out there, right? I suggest that you follow tons of people, tons of traders, but be a student, not a follower, okay? And understand that not everything out there is a gem, but you need to study to be able to figure that out. And I'm here to lead you. If you have any questions, guys, you need to ask me. That's what I'm here for. And I'm not saying I know everything, but I guarantee you I will put in all the work that I can to provide with you the best trading resources ever. Market psychology, like I said, is a journey you're going to have for the rest of your life, but never give up. Understand the probabilities, look at the long game, play for longevity, and I'll see you at the top.